Every loan usually starts with a dream. It can be a new car, a house of your own, or a business idea you know is a sure thing. After all, things will go the way you plan, right? So you take your first loan, usually small, to make that purchase you just had to make, or to surprise that special girl on Valentine's Day. And if you really want to go big, you get the millions for that project you always wanted to start. In that moment, you're only thinking about what the money will do for you, not what it will demand in return. And if we're being entirely honest, most of us have been there. In fact, over 80% of people living in Kenya and Ghana have previously borrowed or incurred debt. Half of these borrowed from moneylenders and banks. It starts small, and before long, it becomes a habit you can't live without. Like 70% of Ugandans who spend more money than they earn. Think about that. That means at this point, new loans are taken to pay off old ones, and before you know it, the hole gets deeper and deeper. Just like the 500,000 Kenyans who are blacklisted by credit reference bureaus for up to 7 years. Why? Because they defaulted on small mobile loans of less than $4. This isn't just bad luck. This happens because there's a system that allows it to. See, the current structure we have on the continent assumes that people don't need better wages. It assumes instead that they need more loans. Traditional banks, they might lend to you at 15 to 30% interest per year, but you have to wait weeks for your application to be processed. Loan apps, they'll charge you the same 30% for just 1 month, but you get your money within minutes. So which would you choose if you were truly desperate? In Nigeria alone, there were up to 284 loan companies to choose from in 2024. But there's always a dark side. The people chasing repayments for these mobile apps are trained to harass and humiliate people into repayment. Their pay is actually determined by how successful they are. One recovery agent told the BBC that the owners didn't care about how you recovered the money. They just wanted it done. You're probably wondering, where are the regulators in all of this? Sadly, regulation almost always comes after the damage is done and not before. Now, have you ever wondered why bank interest rates always stay high? Here is one reason. When you borrow money from a bank, some of it was also borrowed by that bank from the central bank. So if the central bank lends to your bank at say 12%, or what we call the central bank rate, your bank will then lend to you at about 20%. The difference? That's their profit, and they're not about to let it go. And just to show you how deep this culture of debt runs, in 2020, Zambia became the first country to default on its international debt after COVID. Since then, Ghana, Mali, and Ethiopia have also defaulted. So if entire governments are defaulting, is it really surprising when you and I do the same? However, there is hope. Between 1980 and 2020, China lifted an astonishing 800 million people out of poverty. Not with loans, but with higher wages. Factory jobs in cities paid 2 to 5 times more than rural work, giving people stable income before they ever needed to think about borrowing. 800 million people. That is more than half of Africa's entire population today, and that's the kind of change we need. So the next time you feel like borrowing, ask yourself, do you really need this now? Or are you just about to fund someone else's profits? Because as the saying goes, if you find yourself in a hole, stop digging. Tell us your experience with loans in the comments and share this video with someone who needs to watch it. We remain African Leverage.